When it comes to investing in gold through exchange-traded funds, two popular options are GLD and IAU. Both are designed to track the price of gold, but they have distinct differences that can impact your investment. In this tutorial, we will explore the differences between GLD and IAU, helping you decide which gold ETF is best suited for your investment needs. First, let's look at GLD, also known as the SPDR Gold Shares ETF. GLD is one of the largest and most widely traded gold ETFs. With a significant amount of assets under management, it is designed to track the price of gold bullion, and its holdings are backed by physical gold bars stored in vaults. GLD has a slightly higher expense ratio compared to IAU, which can eat into your returns over time. On the other hand, we have IAU, also known as the iShares Gold Trust ETF. IAU is another popular gold ETF that tracks the price of gold, but with a few key differences. IAU has a lower expense ratio compared to GLD, making it a more cost-effective option for investors. Additionally, IAU is designed to be more tax efficient, as it does not have to pay income tax on its gold holdings. Now, let's consider some practical examples to illustrate the differences between GLD and IAU. Suppose you invest $1,000 in each ETF, and the price of gold increases by 10% over the next year. With GLD, you would incur higher expenses due to its higher expense ratio, resulting in slightly lower returns. On the other hand, with IAU, you would benefit from lower expenses and potentially higher returns. In terms of best practices, it's essential to consider your investment goals and risk tolerance when choosing between GLD and IAU. If you prioritize low costs and tax efficiency, IAU may be the better option. However, if you prefer a more established and widely traded ETF, GLD may be the way to go. Ultimately, it's crucial to evaluate your individual circumstances and make an informed decision based on your unique needs. In conclusion, while both GLD and IAU are designed to track the price of gold, they have distinct differences that can impact your investment. By understanding the key concepts, practical examples, and best practices outlined in this tutorial, you can make a more informed decision about which gold ETF is best suited for your investment needs. Remember to always prioritize your investment goals and risk tolerance, and choose the ETF that aligns with your overall investment strategy.